it's me, Buffy, and welcome back to our weekly Market Insight series brought to you by the Capital Markets Trading Desk here at SunWest Mortgage Company. We have a jam-packed episode for you today, so let's get started. Markets bounced back on Thursday after a sluggish start to the week. Treasuries and stocks began the week suffering losses as incoming economic data suggested that inflation may be on the rise and there would be less interest rate cuts from the Federal Reserve this year. However, Treasury yields dropped and stocks gained after the Commerce Department inflation report supported the central bank's patient approach to cutting rates. Earlier in the week, Federal Reserve officials sustained the message that there is still some time to go before the central bank decides to start cutting interest rates, and the pace will depend on incoming economic data. On Tuesday, Fed Governor Michelle Bowman indicated that current rates would move inflation in a downward trajectory, but it is too soon to start cutting rates. These comments were reiterated by Federal Reserve Bank of Boston President Susan Collins, who said that the central bank will likely lower rates later in the year as the outlook for sustainable 2% inflation strengthens. Meanwhile, Bank of New York President Williams commented that the Fed still has a ways to go before considering cutting rates. Investors are no longer predicting the Federal Reserve will cut interest rates by more than 75 basis points this year, and we're not expecting any movement until June. New home sales increased by less than expected in January. Purchases of new single-family residences totaled 661,000, an increase of 1.5%. A Bloomberg survey had estimated the figure to be 684,000. The median sale price was a little over 420,000. Inventory increased to 456,000 from the prior month, the most in over a year. U.S. orders for durable goods fell in January as there was a sharp drop in bookings for the transportation sector. Orders for long-term lasting U.S. manufactured goods tumbled 6.1%. It was the largest decline since the beginning of the pandemic in April of 2020. Economists had forecast a 5% decline. Home prices in the U.S. hit an all-time high in December. The S&P Case-Shiller Home Prices Indices continued their streak of 7 consecutive highs to finish 2023. Prices nationally rose 5.5% in December, beating out the 5% annual gains in November. America's outlook towards the economy deteriorated in February as consumer confidence fell to 106.7 from a devised 110.9 in January. It was the first decline after 3 consecutive months of gains. The assessment came as consumers are becoming pessimistic about future business and labor conditions. Consumers' views of their personal financial situations also weakened. According to Commerce Department data released on Wednesday, the U.S. economy grew at a strong annual pace in the final months of 2023. Propelled by consumer spending, gross domestic product came in at 3.2% annualized rate for the fourth quarter, slightly below the 3.3% estimates. Consumer spending grew at a 3% annual pace, driven primarily by a robust labor market. It is the 6th straight quarter where the GDP growth has topped 2%, pushing down fears that high interest rates will cause a recession. Overall, the economy grew 2.5% in 2023, topping the 1.9% growth from 2022. Rising mortgage rates have caused mortgage applications to fall once again. Even though the average 30-year mortgage rate had a slight decline to 7%, the figure remains about a quarter point higher than it was at the beginning of the year. The MBA market composite index fell by 5.6% for the week ending February 23rd. The drop follows a 10.6% decrease in the week before. Refinance applications were down 7% from the previous week and 1% compared to the same week last year. The purchase index fell 5% from last week and was down 12% on a yearly basis. Rising prices in January continue to worry investors, but data released on Thursday showed that inflation is still on a downward path. Personal consumption expenditures were up 0.3% monthly and 2.4% year to year. The core PCE index, which excludes volatile food and energy costs, increased 0.4% for the month and 2.8% from a year ago. Inflation-adjusted consumer spending dropped for the first time in 5 months, while real disposable income, the main supporter of spending, was little changed. Initial applications for unemployment rose last week but remained at historically low levels. The Labor Department reported Thursday that U.S. initial jobless claims rose by 13,000 to 215,000 in the week ending February 24th from an upwardly revised 202,000 level in the previous week. Continuing claims were up by 45,000 to 1.9 million for the week ending February 17th. Did you get all that? Well, if not, you can always hit the playback button. There will be a quiz. Just kidding. We want to always make sure you get all the latest news here. So if you like this video, please hit that like button. And to be notified every time we upload a new video, please hit the notification bell and subscribe. Have an awesome Friday, everyone, and an even better weekend. Buffy, out.